On Siegel Radio on ESPN Radio 1700. Now, live in studio, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots. Well, you guess we better check our volume here. Steve, are you hearing me any better? Is it too loud, quiet? Checking some of the meters. Too quiet. Okay. How about now? I thought I was clipping a little bit there. We're doing a little better now. Are we able to be heard? As you can tell, this is live radio. So when you're on live radio, sometimes you got to get that technology correct. So as I was saying, this is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Robert Mott will be checking in with us from Winetown, which is pretty much any town, a little later today. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing planner. Plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. Are we celebrating today? Well, I know we're going to be celebrating tomorrow, right? I mean, tomorrow's St. Paddy's Day, so we're gearing up for St. Paddy's Day already. You know, I like to celebrate a little early. National Artichoke Hearts Day. Probably not one of my favorites, so we won't even talk too much about it, although might be Donald Trump Day. It's National Kick Butts Day as well, and National Everything You Do Is Right Day. As opposed to, yesterday was Everything You Do Is Wrong Day, so Everything You Do Is Right Day today. So just, if you make a mistake, revert back to what we're telling you right now, National Everything Is Right Day. Got a lot of news going on. We're watching what is happening in the marketplace. Obviously, yesterday we had the big elections. Marco Rubio dropped out of the elections as he got slaughtered in Florida. Mr. Kasich did okay in Ohio. Still doesn't have a chance, but he's staying in the race. I guess he just likes to travel a lot. I don't know. It seems like it's a lot of work to me to go and travel that much when you have absolutely no chance of winning, but he's going to stick into it. Trump, he's going to be the winner. Even though Ted Cruz says he's the candidate to beat. I don't know what he's been smoking, what he's been drinking. Maybe he had a little bit too much wine. And then obviously on the other side, Hillary Clinton with all those superdelegates, she's got that whole thing locked up. So we'll see what goes on over on the Democrat side as well. Getting a lot of news coming out right now, and I know that Nancy Pelosi will not be happy about this.
But we have to pass the bill so that you can find out what is in it.
Another one of those, pass the bill so you can find out what's in it. Dodd-Frank, probably one of the worst pieces of legislation we've ever come across. The unintended consequences of Dodd-Frank have been just tremendous, and most people have no clue about the unintended consequences of Dodd-Frank. Let me just share a little bit with you so you have an idea. When you start hearing candidates talk about, or you hear your elected officials, congressmen, senators, talking about Dodd-Frank, and some of the changes that they're actually looking at in the law coming up. Dodd-Frank, they are responsible for increasing the cost of your home appraisal. That is part of the Dodd-Frank Act. They wanted to come out and say there's a collusion between lenders and appraisers. And maybe there was, there certainly isn't anymore. So what they did, and again in the infant wisdom, unintended consequences, they created an appraisal management company to be in between the appraiser and the lending company. So you have to go through an appraisal management company. Business always finds a way around these issues, but at what cost? So some of the big banks, they've created their own appraisal management companies. They started charging the consumer about $100, $150 more for an appraisal than prior to the Dodd-Frank Act. And they started paying the appraisers less money than what they were getting under the prior to Dodd-Frank. The lenders are not allowed to vet the appraisers any longer. The management company, the appraisal management company, has to do that. Unintended consequence to you? Just an addition of another couple $100 on your loan. And some people say, well, maybe it's worth it for the transparency. Okay. Then we ended up going through loan officer compensation reform. So the government took control of how much and how loan officers could be paid. And they also, in part of that, they did a change to the good faith estimate. This was done back 2011 or so, part of Dodd-Frank. And what they basically said was there was a lot of lenders that would go and they would give you expenses at the 11th hour of you closing a loan. Not an honorable thing to do. That's why I talk to you all the time about doing your due diligence ahead of time. The idea here is you do not want to be going with lenders that, just an online lender that you have no clue whether they can get the loans done for you or not. There are some good ones. There are some that are not so good. There are some that are good, but they don't have the experience. It's a online service. You fill in the blanks. If you know what to put in the blanks, you're great. But maybe there's a part of the guideline. The guidelines are hundreds of pages long. Maybe there's a quirk in the guideline that somebody with experience might be able to help you with. Well, when you have that online service, you don't get that. Well, when they cut down on the ability of loan officers, they made it easier to go online, and they got rid of a lot of loan officers. A lot of very good people got out of the industry because they cut the salaries by about 70%. Pretty close to 70%. But what did they do? What else did they do? Because that probably doesn't matter to you. What should be important to you is the modification of the good faith estimate then was that when you issue that good faith estimate, if you make a mistake on certain parts of the estimate, there's nothing you can do about it. You have to eat it as a lender. If there are errors or changes to other parts of the estimate, there's a 10% tolerance. The price can change by 10%. Okay. Got it. We want to make sure that people are protected. But what does business do? I shared with you before, business finds their ways around these things. Well, they started padding the fees. Why do they pad the fees? Well, because they don't know when an error is going to come up. You can't foresee an error. Otherwise, it wouldn't be called an error. It would be called collusion or fraud. But you can't foresee errors. So lenders had to increase their fees to cover these, to cure these unintended consequences. Who pays for that? The consumer. Added probably about 20% to the cost of your good faith estimate, or the cost of your closing a loan. Then we had this new law that came into effect the 3rd of October last year called TRID. And it's supposed to make things simpler. Well, now loans that used to close in 30 days on average, and I'm not saying everybody because I know there's some great lenders out there that are doing this much quicker, but on average, loans are closing right now in about 49 days. Big difference from where they were. So if you wanted to get a loan and you wanted to get moving in a 30-day window, which was pretty commonplace before, not part of the current environment. You can't do that because there's more government intervention. When there's more government intervention, it costs you money. How does it cost you money? Well, very, very simple. When you go to lock your loan, and if you don't understand loan locks, go back, Ron Siegel 1 on YouTube. We put a whole little excerpt in there on the mortgage tips on what a loan lock is. But when you go to lock a loan, it's for a given amount of time. The longer the loan lock, the more the lender charges for it. Well, if they're going to charge more for that, it gets passed along to you. How do they pass that charge to you? Higher interest rates. So now you're paying a little bit more in interest. The Dodd-Frank Act has a lot of compliance regulation to it. We're going to talk more about that when we come back, just to give you a little bit more. Actually, we'll talk about it a little later in the broadcast because we're going to chat with Robert Mott. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Robert Mott is on deck. We will also then chat a little bit main reasons to use a real estate professional when selling your house. We're going to go over some signs you need to refinance your mortgage, educating the masses on reverse mortgages, and, of course, a little bit of wine. No H in that one. You can reach us anytime. Call the off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Ron Siegel Radio Date Night Trivia, presented by Reunion Kitchen and Drink. Friday, Ron will pose a question based on on-air conversations during the prior 7 programs. The person to post the answer according to the guest conversation will win a date night package, including a dinner gift card for Reunion Kitchen and Drink. You might even be able to say hi to Ron when you visit Reunion Kitchen and Drink.
It's not every day your home gets flooded, but when it happens, you've got the good people at Apris on your side. With over 25 years of construction and insurance experience, they can turn any disaster around, making your home good as new. For 24/7 support, call 844-GO-APRIS or find us on the web at www.apris.me. Day, night, rain, or shine, when it happens to you, you know what to do. Go Apris. Remember, call 844-GO-APRIS. That's 844-462-7747.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rates subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 01869. 9452.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. Educating the masses on reverse mortgages. That is the subject of today's Word on Wealth segment, brought to you by the area trusted professionals of Ron Siegel Radio. Reverse mortgages. It's a tremendous product, and I'm going to go out on a limb here. Most people don't understand them, and many times when we don't understand something, we automatically don't like it. And I'm going to share with you that the reverse mortgage in 2016 is a completely different product than it was in 2015. And a lot of people still have the 1980s version in their mind. The reverse mortgage product, you need to understand it if you're over 62 years of age or you have a loved one that is over 62 years of age. There are no reservations for dementia, broken hips, medical emergencies. You got to be planning for that. And I share with you on a regular basis that we just have to plan. You got to plan. You got to understand that these things happen, and home equity is very, very, very risky. Because if you, God forbid, a loved one breaks a hip and they've got all kinds of money in their house, but they need to access the money and now they're not working. Do you think there's a place for them to go and get a loan? No. But if you get the reverse mortgage online right now, and there's a big myth, they cost a lot of money. No, they don't have to. So if you get it online now, and don't even take any money out of it, but have it standing by there so you can write a check if and when you need it on a minute's notice, think about it. We're going to talk more and more about the reverse mortgage product and who it's great for in the days and weeks to come. That is the Word on Wealth segment, again brought to you by your area trusted professionals, the Household Board of Directors. Red wine means it is time for our weekly chat with Robert Mott, our wine guru. Good morning, Robert.
Good morning, Ron. How are you today?
I am doing wonderful. I hope you're doing well also.
Absolutely. Sitting here in beautiful downtown San Francisco today.
San Francisco, so you're not too far from getting up there to wine country.
Not too far at all. I can't quite see it from here, but I know it is there. I can feel it.
You can feel it. Well, you know something, with St. Patrick's Day tomorrow, maybe it'll be quiet up in wine country and might be able to enjoy wine instead of green beer.
That would be my preference, that's for sure. Even if it's any green wine recently, as far as I know, and if they have, I would hope they would refrain from doing it this year.
Absolutely. Well, we might have to chat a little about some St. Patrick's Day wine pairings in a bit, but let's talk about, I don't know how we get into the medical profession in wine, but Dr. Rieslings, what's that all about?
Yeah, that's something that we always kind of joke about. It's kind of a funny thing. There are a lot of Rieslings, especially German Rieslings, particularly is what we're talking about, that have doctor in their name. I mean, we have Dr. Lozen, we have Dr. Bernkessler, we have Dr. Heidelmans, etc. It's not really a Riesling thing, but it is a German thing. In fact, like I say, it's a common joke around the wine business that everybody in Germany is a doctor, and especially everybody in the wine business, apparently. And you'll find plenty of German wine producers with doctor in the title, even though in the U.S., we typically only refer to medical professionals or some noted PhDs in science, perhaps, as doctors. Germany is one of the cultures where it's basically anybody with an advanced degree will probably employ that term doctor. Of course, it also can be used as a term of respect for someone who's accomplished much out in his field of study outside of academia. Many of the doctor winery brands are named after someone with an advanced degree in agriculture or viticulture. So what's interesting, the Bernkessler label, there's a mythology behind that one, the one I just mentioned earlier. According to legend, a 14th century archbishop was gravely ill until he drank wine made from that particular vineyard. And, of course, that's the name Doctor, D-O-K-T-O-R, was applied there for it based on its legendary curative powers. So, obviously, wine doing good things for health is not just something here in the late 20th and early 21st century. It's been around several hundred years.
Interesting. Well, I thought when you said about the joke going around the wine world and the idea of doctors' names on wine and doctors in wine was the typical wine joke is how do you make a small fortune in wine? And
with a large one, of course.
Start with a large one, exactly.
Yeah, that was common as well. But yeah, in Germany, obviously, their culture is a bit different than ours in that they do employ that title rather liberally compared to perhaps how we apply it here in the U.S.
Interesting. Okay, so let's go on to a cult wine. What is a cult wine?
Oh, a cult wine. This is a probably overused term in the wine business. I think I would call it really, it's an elusive and can be somewhat of a fleeting term that really applies to rare and highly sought after wine. Cult status is what all those little upstart guys in Napa are trying to get to, the ones that only make a few barrels of wine every year. They're trying to get it in front of the right critic or the right, perhaps well-to-do person and, essentially elevate that wine to a cult status. Of course, actually getting taste of cult wine really presents a bit of a problem because supply is usually so low that even those people who have significant wealth at their disposal many times go without. This in turn skyrockets the price. That kind of supply-demand thing.
Sure.
Increases the wine's fame, and then the price goes up even more. So you kind of get the idea. These wines usually have long waiting lists associated with them for just the right to purchase or the privilege to purchase. And many times the wine will be well in excess of $500 to $1,000 per bottle. I mean, that's kind of typical cult wine region for pricing. Now, the interesting thing, of course, about cult wines is a lot of that's kind of the psychology of the market, that supply-demand thing. Is a lot of times there are very delicious alternatives that are produced right next door, literally, but the vineyard right across the next row over. So much great wines made in the vineyard and not necessarily by the winemaker. No, the winemaker has a lot of influence over it. Similar vineyards in the same region can produce equally outstanding wines in the hands of a good winemaker. So, in a way, cult wines are useful to present a benchmark for that particular region's potential quality. So, a quick example. Here's one that a lot of people have heard of. It's called Screaming Eagle Cabernet. It's out of Oakville, by Oakville AVA in Napa Valley. And if you want to go pick up a bottle of Screaming Eagle, if you can find one, you might spend $2,500 to $5,000 on one bottle of that wine. Now, I'm guessing you will do that yourself. But if you were really motivated, it's like those things. If somebody gave you $5,000, you could probably go invest it in something else. But you could go buy a bottle of Screaming Eagle. Now, this would be a classic. In fact, it's almost a prototypical cult wine. However, if you look around at the adjoining vineyard properties around Screaming Eagle in Oakville in Napa Valley, there are many wineries represented, even some small wineries, Gargiulo, Rudd, Delaval, Vinecliff, Joseph Phelps. Some of those you've probably heard of. While these wines will likely not be inexpensive, they may be $200 plus per bottle. That's still less than a tenth of the cost of the Screaming Eagle, the example of a prototypical cult wine. And then at the bottom line is, would you be able to tell the difference between these wines? I mean, one the $5,000 bottle of wine or the $250 bottle of wine that's produced from grapes right next door. And of course, the answer is maybe. If you have a really well-developed palate, you might be able to tell the difference. But for most of us, I would say the difference will be very subtle, and you can get the experience of that cult wine or a similar experience to that cult wine for less than that tenth of the cost of trying to pick up the name cult wine. I think we impress your friends and neighbors. Pick up a bottle of Screaming Eagle, and if they know what it is, they'll probably faint and go off all over the place and say, "Hey, I can't believe you have that," etc. But that's really more of a impress the neighbors kind of bottle as much as anything else.
I think the Vinecliff for me probably would taste a lot better than the Screaming Eagle for one reason and one reason only. I'd probably be dripping tears into the Screaming Eagle when we opened it, knowing how much was spent for that bottle of wine.
Yeah, and then you would do the math about what one glass was worth at that point. You kind of go, God, I just... and,
Yeah, that's holy. Yeah, and something that's kind of interesting that you brought that up this morning, Robert. I was at a wine tasting, I think 2 weeks ago, and one of the people that were there, they had several different winemakers there, and one of them that was there was telling me that they were a representative of a company called Two Hands, and I don't know how great or horrible that wine is, but he said their wine comes right out of the middle of a vineyard, and there's some real high-end wine right above it and some real high-end wine right below it, and they sit there right square in the middle. So how much different could it be if it's in the same vineyard right in between two high-end wines?
Yeah, it's going to show some of the same characteristics. Now, probably in that situation, the winemakers that are employed up above their vineyard and below their vineyard are probably more expensive winemakers. Maybe take a little more care. The barrels may be a little better. They may, there may be some subtle differences there. But the backbone of the wine will probably be very similar, and that's really the point. And again, for most people. You kind of go, well, is it worth that extra money? And sometimes, yes, the answer it is. But many times you can find a great bargain. There's a solid bottle of wine. It may not be the one that, you say, impresses your friends and neighbors, but it would probably impress them from the standpoint of, you one more time, Ron, you opened a good bottle of wine for us all to share. So that's I think that's one of those things to keep in mind. Wine is primarily made in the vineyard. Basically, all the winemakers can do is really get in the way of what the vineyard is trying to express.
Interesting information. So tell me real quick, though, because we're running a little long, but give me an idea. What am I going to be drinking with corned beef and cabbage on Thursday night?
Oh, my God, that's a really tough one. I would go with a big, nasty, and nasty is my own descriptor of that. Probably a big, nasty Zin, or maybe a Petite Syrah or Syrah, something that had a lot of backbone and grip and weight to it, something that would really stand up to the strong flavors of corned beef and cabbage, and with sometimes the strong nose or smells associated with corned beef and cabbage. So I would go with that kind of big, meaty kind of wine. I'd say Syrah, Petite Syrah, or a big heavy Zinfandel. Okay,
give me one more for Irish lamb stew.
Irish lamb stew. I haven't had Irish lamb stew too many times, but I wouldn't probably divert too far off that. I think you want to kind of probably pivot off the slightly gamey texture and flavor of the lamb, and probably go with something. I would say probably Syrah. Is a good bet for that. Something complementary. Something that stands up to a stew as heavy as heavy texture as well. But that kind of gaminess of the lamb with the gaminess of the Syrah can sometimes make a good pairing. Alternatively, I would say maybe a Spanish Rioja or something like that would be a good, or Tempranillo, some variety would be a nice add on that.
Sounds like some great information. We're going to be eating and drinking heavily tomorrow, as we do every day. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach us anytime. Call the off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Stay tuned. We'll be back in just a few.
Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL lendingteam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Southern California attorneys have over 15,000 real estate agents to call in Orange County for their personal and professional needs. Why do they overwhelmingly call Melinda Johnson? Simple. It's the Melinda Johnson trifecta. Melinda is an attorney, real estate broker, and realtor. Does your family deserve the same professional services California lawyers demand? Call Melinda Johnson at 714-863-5485. That's 714-863-5485. Or on the web at freedomfirstproperties.com. Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
37% of American homeowners believe they have over 20% equity in their homes. Fannie Mae tells us 69% of American homeowners have over 20% equity in their homes. Fully 1 in 3 American homeowners are not informed about the amount of equity they have in their homes. Are you one of them? How might this be holding you back from achieving your goals? Text RSR CMA to 79564 to get a property valuation from one of the area trusted professionals of Ron Siegel Radio. Again, to know how much your home is really worth, simply text RSR CMA to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by VIP Mortgage. When you're ready for that mortgage, VIP has the products for you. The basic ones, those are the simple products, the FHA, the conventional, conforming, jumbo products, all the ones you need if you're looking to, you can document everything. But what about those of you who do not live your life based on lending guidelines? And most of us don't even know what lending guidelines are. Well, bank statements, if you put money in the bank and you're a business owner, we can, there's programs that VIP has for that. If you've had a foreclosure, bankruptcy, short sale, VIP has programs for that. Maybe you got a bunch of money in the bank but no job. Yeah, there's programs for that. And what if you want to give your kids a house? There are very, very specialized, or give them the family home. They're going to start making payments or pay you for it. There are very, very specialized programs for them as well. Most of the time, though, it's information. Again, we talked to Gary Capita about this last week, and he was sharing from an insurance standpoint, or from a CPA standpoint, tax standpoint, that there's a lot of times that people just don't have all the answers to their tax questions. They have to dig out the information. Well, if they have to dig out the information, do you think that's really going to happen when you're going online and filling out their questionnaire? Who's digging out that information at that time? Nobody. So just be careful when you're doing those things. So let's talk a little bit about some refinancing tips that you may want to know about, or how do you know when it's time to refinance? And I'm going to tell you right now that based on some of the economic numbers that came out just today, that, and it's kind of technical, so I'm not going to get too far into the weeds with this, but based on just some of today's numbers, we're going to look and see that there might be some increases in interest rates. And that's not what you want to hear, but the Federal Reserve, they're coming out with their statement later today. I got to check, today's Wednesday, yeah. Later today, the Federal Reserve will be coming out with their statement. They're meeting this morning about 11:15 California time, 11:30. There'll be a press conference California time. But the core CPI number came out higher than the market expected, and that might give the Federal Reserve some cover to increase interest rates. Probably not a good idea, but it might give them some cover to do that. But even worse than that, if they don't increase interest rates today, which they're not going to increase them today, but depending upon what the commentary is, if they say that, if they bring this up and say, well, maybe we've got an inflationary issue that we're going to have to look at, it could start getting us back into that roller coaster that we saw a lot of last year. So what do you need to do then to understand these issues and make them work for you? Well, combination of items. First off, you need to look at what your interest rate is. Now, the Freddie Mac interest rate as of this last week, 3.68%. Now, keep in mind that when you hear a Freddie Mac interest rate, they're averaging numbers from a bunch of different participants in their survey. they will generally be looking at a credit score of over 760. And in some instances, they're also looking at fees, points. All of that gets filtered into that number. So do you get a 3.68 interest rate? No. Actually, to be honest with you, in most instances, unless it's a very, very specialized product, interest rates travel in 1/8% increments. So 3.5, 3.625, 3.75. So 3.68, highly unlikely that you're going to see that rate anywhere. But when you average numbers, you can get that. So if you're paying more than that, then maybe you should be looking into exploring a refinance. Again, our friends over at VIP Mortgage can help you with that. They can do an analysis. How long is it going to take for you to break even? You need to do a break-even analysis to see if that makes sense. What is a break-even analysis? Well, you take what the cost of the loan is divided by your monthly savings. And, so just do round numbers. If you've got a $300 cost of the loan, and it's going to be more than that, but just use $300 because it's easy, and the monthly savings are $100 a month, obviously you're looking at a 3-month break even. If you have $3,000 and it's $1,000 a month savings, still a 3-month break even. You're probably not going to have the $1,000 a month savings either. But that just tells you how to figure out the break even. Now, can you get your closing costs reduced? Can you get them to zero? Absolutely. But then you're going to have a higher interest rate. Somebody's got to pay those prices. Somebody's got to pay for the processing and underwriting and documentation and compliance and legal fees, all those other things that go into the cost of a loan. It gets paid for. Don't let anybody tell you that it's free. There are no free lunches. You're smart enough to know that. I don't have to tell you. But you're going to hear advertising on the radio that says it's free. No, it's not. It's built in somewhere else. They're hiding it from you. Okay? Or, like I just shared with you, you disclose it. You say, something, if you want, build all the costs in. It's going to cost you an extra 1/8 of a point or an extra 1/4 of a point or whatever the number is. Be clear and transparent. Simple. More, maybe just add it to the cost of the loan. If you do a total cost analysis with the folks at VIP Mortgage do, they do that total cost analysis. When they do that, then you can see, okay, which way is best for you? What makes the most sense for your family? When you know what the break-even months are, and I'm going to guess in many instances you're looking at somewhere between 10 to 12 months of break-even. You're going to keep the loan for 5 years. I know it's your loan and you're going to keep it for 30 years, but trust me, 5 to 7 years, that's on average what we keep our loans in the United States of America. Life happens. You decide you're going to buy a new house. You're going to want to put on a new kitchen. You need a new roof. I want to put in a pool. Pay off some credit card debt. Help with college tuition. Help the kids with a wedding. All those things happen. Life happens. When life happens, you take money out of your house. It's your equity. Use it. Don't put it on a credit card at 30% interest, which, by the way, comes up to the next topic. You might want to do a refinance if you need to get cash out of your house, out of your equity. It's your money. Why would you take cash out of your money? Well, you've got a lot of different reasons. If you're paying a lot of credit card debt every month, give us a call. We'll figure out what your blended interest rate is. Your weighted blended interest rate. Now, why would you look at weighted blended interest rate? Well, because that's what your household is paying. If you're looking at $30,000, $40,000 in credit card debt, think about it. You're paying somewhere between 9 and 30% interest on that, and you're making 0 on home equity. Take that money out. Gary Capita told us, he's the CPA, I'm not, but he told us last week that in most instances that becomes tax deductible. So why wouldn't you look at changing from a tax deductible or to a tax deductible from a non-deductible issue? See, it just doesn't make sense to me that you would want to keep paying that 30% interest when you have an opportunity, even if you had to go, maybe you can't get that 3.68% Freddie Mac rate. What if you could get an outrageously expensive rate, 4.5%, 5%, and that cuts that number down drastically. Again, you can't make an educated decision if you're not educated. So doing the debt consolidation loan is another reason to consider, or a reason to refinance your mortgage. Again, see what the payoff time is. Here's the last one I'm going to share with you right now. You've had an FHA loan for several years, or any other loan that has mortgage insurance, and now you've got 20% equity in your property. Well, now you want to be chatting, again, our friends at VIP Mortgage. They can do the analysis for you. See about FHA, you can get the mortgage insurance off, or if you don't have a full 20%, got good credit, maybe you can cut that mortgage insurance in half. Maybe your interest rate goes up a little bit, but your payment goes down. I don't care what the interest rate is. You can't do anything with an interest rate. You can do something with dollars, Benjamin Franklin's. That might be the reason. That's why I suggest highly right now, give us a call, 800-306-1990. I'll put you in touch with the folks at VIP Mortgage, and they'll see if this makes sense for you, because you are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to talk a little bit more about that Dodd-Frank Act that we spoke about earlier. Reasons to use a real estate professional when you're selling your home, and I'll even give you a resource for that. A lot of that's still to cover. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you have a loved one who wants to stay in their home, but you have health concerns about it? The Preferred Care Team understands the challenges of caring for your loved ones. Their goal is to keep seniors as independent as possible while maintaining their health, safety, and overall well-being. Whether you need just a few hours a week or 24-hour care, Preferred Care caregivers are trained to meet your needs. Call Preferred Care at 714-696-9150. That's 714-696-9150. Or visit preferredcare.com.
In these uncertain times, it's getting harder and harder to find a safe and effective method of investing. If you're looking at retirement options that can provide some real security for you and your family, look no further than a reverse mortgage with Siegel Lending Team. Hundreds of thousands of other Americans are already taking advantage of reverse mortgages. It allows you to eliminate monthly mortgage payments, pay some bills, or simply enjoy your retirement more. A government-insured reverse mortgage with Siegel Lending Team allows seniors to stay in their home and turn their equity into tax-free cash. To qualify, there are no credit score requirements, and remember, you continue to retain complete ownership of your home. Call 1-800-306-1990 to receive a new special edition handbook, Feature Reverse Mortgage Borrowers, plus an educational brochure absolutely free. Find out more. Call Siegel Lending Team today, 1-800-306-1990. Siegel LendingTeam.com. That's SIEGEL LendingTeam.com, or 1-800-306-1990.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
If you see a downed electric power line, you should never go near it. Stay safely away and call 911 and SDG&E immediately for assistance.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. When you are ready for that new home, or if you want to know the amount of equity you have in your home, you can't get the equity position online. You got to talk to somebody to get that one. Some of the other numbers, yes, they can give those to you, but your equity position, you can't get those online. It just does not work that way. So here's the free resource for you because you are a listener to Ron Siegel Radio. Text PAIR, P-E-A-R, PAIR, to 79564. The area trusted real estate professionals of Ron Siegel Radio will get a hold of you, chat with you, talk to you. You can't do it with just online stuff. They need to know what side of the road you're on, what side of the golf course you're on. Do you have a view? Do you not have a view? These things only come from you having a conversation with somebody. So text PAIR, P-E-A-R, to 79564. One of the professionals will reach out to you, do a little bit of maybe a 10-minute consultation. It's not like it's going to take all that long. And maybe you'll be able to see if you can make an educated decision for your family. Most of the time when I hear people that talk about wanting to know the equity of their property, it's because they're contemplating a change. They're either looking at refinancing their property, or they're looking at selling their property, or they're looking to buy something new. Well, if you're looking to sell the property, obviously, you want to know the equity position, you want to know the value. Text PAIR to 79564. You might also want to get a hold of our free guide, things to consider when selling your home. And again, all you have to do is text HSG to 79564. HSG, Home Seller's Guide, to 79564, and we'll get you that guide totally free. Main reasons for using a real estate agent if you are contemplating selling your home. I get so many people that talk to me and they say, Ron, it's a hot real estate market. I just had one, I think it was yesterday or the day before. Somebody said, Ron, it's a really hot real estate market, and my neighbor put their house up for sale with a professional, and I'm going to put a sign in my yard to see what I can do on my own. Okay, so let's chat about that. Let's think about it. What are you trying to accomplish when you're trying to sell your home? And there's basically 5 things you're trying to accomplish. Number 1, you want to sell it for the best price. You want to sell it within a predetermined time, sell it with the least amount of hassles, close the sale the same day they move into their new home. And the 5th reason is obviously they want to make sure it sells. Most important. In order to dramatically increase the chances that the house sells, a home buyer should list with a real estate professional in the market. That's why I call it the area trusted real estate professionals. Area trusted. Agents have access to a vast majority of the available buyers. I think the number, maybe we'll get to it here. According to the National Association of Realtors, recently released 2016 Home Buyer and Seller Generational Trends Report, 87% of all buyers purchase their home through a real estate agent or broker. And more than 8 out of 10 in every age group used an agent. So you're saying, okay, Ron, that means I'm going to be with that 1 out of 10. 87%, so 13 out of 100. Well, think about that. That's also going to include those where you've got generational transfers, right? Because I just had a gentleman yesterday. He wants to move into a smaller house. His kids are going to take over his house. They need to do that transfer. That's going to be into the numbers that they don't need a real estate agent. They already know who's buying it. They know how much. They are going to use a real estate agent to make sure the paperwork is done properly. So all purchasers, 87%. Younger people, they must be the smartest. 89% of those 35 and younger used an agent or a broker. And ironically enough, the ones that don't use an agent or a broker, I should say they use them, but they're the smallest percentage. 83% of those who are 70 to 90 years old don't use an agent or a broker. Well, what do you think they're doing? It's going to the kids. So if you want your home sold, the best way is to go where the buyers are. Now think about that concept, because I kind of scanned over that, and I shouldn't scan over that. If they didn't even mention this part, that 87% we talked about are buying from an agent or are buying a home using a broker. The other part that they don't talk about, or they didn't in this particular report, we might have another one coming out that will look into that exact number. But generally, not always, but generally, you're going to get more money when you sell your house using a real estate agent than you will if you sell it on your own. You know, Ron, how could that be? Statistics. You know, I'm a numbers guy. Well, I talk now a little bit, but basically a numbers guy. The numbers say that if you sell your home using a real estate professional, you will get 14% more money for your house than selling it on your own. 14%. That's a lot of money. When you're talking about real estate, 14%, that means on a $200,000 house, you're talking $28,000 extra. Think about that. You're talking about a lot of extra money. And the other part of it, which we mentioned as part of the report here, right, we talked about it, is you're doing more work when you're doing it on your own. And you're opening yourself up to a lot more liability. Right? Why do you think real estate professionals carry E&O insurance? It's to protect them in case there are errors and omissions and they get sued. Do you think you're going to go out and buy errors and omissions insurance in case you get sued by a buyer? It's not agent to agent that do lawsuits. It's a buyer feels that they were misrepresented or that something was told to them incorrectly who initiates a lawsuit. They're the ones that are harmed. So just because there's a real estate agent or no real estate agent, they're going to look at it if there's a problem and say, you know something, they never told me about that. And they're going to file the suit. Now, I also shared with you, and I've got new numbers on this one, that there's a problem right now, that the appraisals are coming in less than contract price. Well, if an appraisal is coming in less than contract price, you might have, who's going to be prepared to renegotiate if you need to renegotiate? Who's going to educate or help educate the appraiser? It's the real estate agent. They're going to go out and give them supporting documents. Now, the appraiser has no responsibility or requirement to follow the information that comes from that agent. But just think if they're a nice agent, a nice human, you got an appraiser, they're good people as well. If they can help each other do their jobs more efficiently, more effectively, don't you think they're willing to? Doesn't that make a little bit of sense to you? So maybe they can bridge the gap of what the variance is and save a deal. Average days to close, I told you earlier it was 49 while we've been on air. A new report came out that says that now the average days to close alone is 50 days. Now, if you have somebody come into you and you say, we're going to do a 30-day escrow, who's dealing with the other 20 days? Who understands those? Who knows how to deal with that? Let's think about it. Okay? There are a lot of moving parts when you're dealing with buying and selling a home. And if you think that you're going to do it on your own and do all these extra things, talk about the E&O insurance, which we already talked about, talk about the appraisal, talk about inspections, talk about disclosures, talk about the real estate contract. And all of that, you get to do that if you sell your house on your own. Talk about all of that and get less money for your property. Does that make sense to you? I mean, I'd rather let somebody else do all the work and make more money too. Number one reason people want, or number one goal that people are selling their home, get the best price. right? You don't want to get the least price. I can help you if you want to get the least price. That's pretty simple. You want to get the best price. So get the best price. Use the real estate agent. That's their job. They have access to the market, but you got to listen to them. Because a lot of times, getting the best price means pricing the property on the listing time low. That way you get more people in there. We'll talk about these more in days and weeks to come. Because right now, all I want you to do is set that first radio preset button to come back here to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions, call me anytime, 800-306-1990, 800-306-1990. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
XEPE 1700 AM, Tecate, Baja California.
You're listening to ESPN Radio 1700.